Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 12th of October. All right, we've got a bit of mixed data coming in and balancing out the sort of dovish comments from the Fed right now. This is a really good lesson in this one. I'll show you the PPI numbers here in a second, but it just goes to show you what the Fed says. And even though it's slow little leaks and trickles of information from various Fed officials, it dominates the fundamental picture, right? They are the top of the pops. Now, let's just have a look here because you need to sort of know what they're talking about, right? When it comes to the PPI numbers, okay, the month-on-month numbers, 0.5, okay, previous or where's the expectation? Sorry, 0.3, right? So slightly higher numbers. And the final demand, 2.2, expectation was 1.6. So you know what? To me, the PPI numbers overall are pretty good. Right, actually, just shows you that there's still inflation in the market. Now, is that something for us to be aware of, that we need to be aware of? Well, probably. But it just goes to show, like, if the Fed hadn't come out and said what they were saying about, you know, what we're at the end of the cycle, then these numbers, the producer price index tells you that there's still inflation in the market bubbling away. So that would have sent the dollar higher. But that's the thing, right? You look at the central banks, and it's all about the central banks, what they're thinking, not what the numbers are thinking. So if you go back and wind this back to, I think Monday or Tuesday, what are we seeing? Exactly what I was talking about. The dollar, and this is no sort of rocket science. I'm not trying to give myself a huge pat in the back here, but when you look at the markets every day, day in, day out for like 35 years, you can feel the move coming, right? You know, we often used to call it a gut feel. Right, you can just see it. You can see what's happening. You can see where their momentum, especially when they've got all the currencies up here at once, and they are starting to move with the overall dollar dip, right? And this has been a gradual move. This is exactly what the Fed wants, right? From a central bank perspective, let's get it out there that we're sort of at the end of the hiking cycle. We don't want to see any dramatic moves in the dollar, and they are getting the move factored into the market. Now, dollar yen. And this is where your knowledge of the markets comes into play. Dollar yen, well, we know it's the odd one out, right? We know the BAJ's got their back up against the wall there, right? Dollar CAD, well, we also know that the Middle East conflict is disrupting oil prices, and that disrupts dollar CAD. So these two pairs here are out of the game, but the other ones are in it. Now, before I sort of jump up and down and give myself a huge pat on the back and say, you know, I should be cleaning up, the price action here hasn't been exactly easy, right? It's like these things like Euro, Sterling, Aussie. Let me just change that pen there. You can't really see that. These things are going up, right? That's great. It's easy to pick direction, but managing the trade here, there's a lot of slow moves higher and a lot of pullbacks, right? The Aussie, now I haven't moved this trend line. It's hit exactly on the trend line as you would expect and pull back, right? The market is waiting for now. They've repositioned for the US CPI numbers. So what I was saying is when the Fed starts to talk like this, or a central bank, it's almost the time to, you know, we've got trend lines in play here. It's the time to come back and look at your overall plan and think, you know what, we've got, and this is, I'm going back to earlier in the week, right, to give you a bit of an example is, okay, you've got Thursday is the key day, right? US CPI, which is today. Now, that's where we're going to get a lot of answers. In the meantime, these things could go up. It's more of a medium-term trade outlook or perspective, right? So with that, you need to open up your parameters, a smaller trade size. You're just trying to get on the trade, right? Not make $1 million, but, you know, get a trade on with a decent size stop loss and without a tight trailing stop, because in this environment with very little data coming out and that sort of background of the central bank telling us this, that, and the other, you need to have a bigger trade plan. With bigger parameters. Of course, you'll have a bigger take profit, and it gets you into the trade and allows you to stay in the trade for a few days. The only weird thing about this week has been the Middle East conflict, right? And that sort of has kept a lot of traders out, probably why some of the moves are not as swift as we'd otherwise see, right? So this is just piecing it together is key to sort of making some cash. Now, let me just sort of go around the sort of grounds here. Now, looking at the global markets, okay, you can start to get an idea. If I just get my screen updating there, What we're looking for across the board with that dollar move, okay, the bonds, yeah, a little bit lower. They're sort of stabilizing, but they're sort of drifting lower still. If I just get my pen here, obviously the dollar index lower, that means the euro higher. Like euro, whilst I'm here, they've just changed the settings for these drawing pens, but right, we are right on a technical level here. Euro is primed for a move here on weak US CPI numbers, right? By far and away the best one. Aussie dollar also, but euro, there's more liquidity in that instrument. So I like the look of that. Gold still set it eking up higher, and start to see here how like by the end of the week, I was saying this on Monday, if there's no increase in activity over there, then the market becomes so desensitized to disruptions in the Middle East that they'll forget about it. And oil is drifting lower. Okay, equity markets, well, they've had a great move. You can start to see here where the price action is starting to stall. Does that mean it's time to sell? Absolutely not. You need to know what's going on. If we get weak US CPI numbers, the equity markets, mate, they are back heading topside and aggressively, right? Because that will happen, because what we've seen is with the moves, we've seen a massive clean out of positions, right? That sort of basically recharges the market for another move to the top side. Cryptos, well, they're sort of crapping out to the downside. So there's the good thing about the opportunity that's coming up today. Now, let me just come back to that is, like I was just describing there, we do have a lot of good setups here, right? So we know what the US PPI numbers were. We know what the Fed are doing. So when you come over here to look at the, actually, let me just give you a look at the overall calendar. Okay, let me just go up the top here. We'll change this to like the second tier data. And so that includes the top tier and the second tier numbers. So when you look at today's trading, now, if you're based in the UK, I'd be telling you, yeah, look, have a good crack at the numbers here. Manufacturing production numbers out of these numbers, besides the GDP, is a go-to, right? This is an aggressive number, right? We've also got on the back end of that, the ECB monetary policy accounts. Like this is like an intra monthly meeting where they sit down and go, you know what's going on? Instead of waiting for meeting to meeting, they keep a track of what's going on. It allows them to manage and make decisions easier. A very smart idea by the ECB. It's been around for a while, but then it comes to game time, right? And what I'm talking about is the US inflation numbers, right? This is what we've been waiting for. Now, there's two types of numbers. You've got the top ones here, right? You got the previous numbers and the consensus. These are excluding food and energy, right? And the ones below that, it's the ones I like to look at, and the Fed, okay, are just the basic inflation numbers, right? And these are the numbers we're looking for there. So now if I just drill into those two components, I'll just go to News Score just to try and work out exactly what's happening across the board here and what we should be looking for. Okay, so let me get my pen. All right, so the core numbers at the top here. Okay, you've got, here's the expectations. Now, most importantly for those traders who are new to, say traders for traders, the range here is the key, right? If these expected numbers are outside the range, you're going to get a bigger move, right? The trend is down, okay? So what's the easiest trade? Go with the trend. So what we're looking for is our numbers. Let me just change this pen again. Okay, ideally below these numbers, right? If you're looking at the core inflation numbers, for me, I like to sort of keep an eye on what the actual Fed refers to, right? And generally, they are referring to this number here. Okay, you got the range in the middle there. Expectations 0.3, 0.1 to 0.6 is the range. Okay, so what I'm looking for, you'd love to see it, but rarely do you get the ideal situation. A number below 0.1 would be epic, right? This number here, the year on year, 3.6%, previously 3.7. We haven't got a range there for that at the moment. We'll see how we go closer to the numbers. But these are the numbers that do determine, right, where everything goes. And when I say everything, I mean the global markets, right? So you look at the opportunities here, okay, it's going to have a major impact. Where's my dodgy little pen? okay, on the bond yields, on the equity markets, and the value of the dollar, right, across the board. Now, right now, what are we seeing in the market? And this is what you want to do when you come back to the markets at the time of the release. Okay, US equity futures are going up. This is signifying like a risk-on day, right? And you're going to see that work through the Asian equities and the European equity markets. Are we seeing this in the currencies at the moment? Not exactly, right? And if I come across to my main screen here, right, and an easier check is, if I just go to my FX template, I'll see that when we're looking at the dollar, right, let me just move that over there. Okay, there's no uniform price action just yet. And this is pretty common. As you come out of the North American session, you get very directional markets. When it hits the Asian session, the markets stall, right? They lose momentum. There's probably less liquidity, especially for the first 2 or 3 hours until Tokyo comes online. But at the moment, across the board there, you know, these ranges have just been reset not long ago, so it's not a true reflection. So you probably want to wait till the middle of the Asian session to see if there's clear uniform direction here on the dollar. What I can see from this is the yen is up, Swiss is up, right? Still, that safe haven trade related, you'd have to think, to the Middle East conflict is still in play. All right, so that's where we are, guys. It's I tell you what, this is like for traders who do this like all the time, like myself, this is sport. This is the game day. It's like Thursday night football, right? You've got to get in here, have a look at the markets, and really determine, depending on your risk profile and appetite, right, and where your strengths are, okay, where's my little pen here? I'm losing sight of that. Okay, which instruments you like to trade. Now, to me, right, this is like you don't have to be a rocket scientist here. Euro has been floundering, and Aussie's been trading with a weight on its shoulders as well. But the best thing about these two instruments, okay, is they have lined up perfectly with the technical setup, whereas sterling and Kiwi, well, they've already shot through the levels, right? They've already gone up. So to me, they aren't the best sort of opportunities to be looking at. I would be looking seriously, Euro going up, Aussie going up on the back of weaker US CPI numbers. That looks like an easy trade. But in actual fact, you know what? Will the dollar rally if we get strong numbers? Yeah, it will. So there's opportunities across the board here. We do have another entry level here, just below 90, the figure on dollar Swiss. Okay, once again, weaker US numbers works nicely there. Would I hit dollar yen? Well, it's a dollar trade, but not with the way it's trading, right? Would I hit dollar CAD? Not really either, right? It's like confused with where it should be going. Dollar index, well, it's in the middle of nowhere, right? So that's my sort of view on the trading opportunities. And if I took that as sort of came over here to the major instruments, you've got to think, if we start to see weaker US numbers, well, I tell you what, from these levels, the equity markets will rally. Of course, a technical level would be great. Looks like the NASDAQ sort of got one there as well. You'd be looking to hit that as well. And obviously euro top side, dollar down. Now, on the reverse side of that, but I like to, I quite often put all my eggs in the one basket when I start to see trends, and when I have in my head that the Fed are talking about, you know, potentially this is the end of the hiking cycle. This number will confirm it, right? That's what we're looking for, right? So if you're looking for the numbers and going, oh yeah, we're just going to be trading the numbers. No, there's a greater thing here, bigger picture, right? These numbers here are going to give us, okay, these two here in particular, they're going to give us direction for the dollar for the next couple of months. Don't forget it. We could be starting to wind out any potential chance of a hike by the Fed in November. That means weaker dollar, higher equities, right? It doesn't get easier than this number. It's so much easier than the US non-farm payrolls, right? Which everyone sort of gets a bit frothy about. All the people driving Lambos for some reason love those numbers. Professional traders, you look for the key data that the central bank's looking at and you hit that, okay? And that's the CPI numbers here. So once again, if you're in the UK, check out those UK numbers. I'm not going to really dabble with those. I don't want to go into the US CPI numbers losing a bit of cash. So I'm more inclined to sit back, wait for the big number, and then hit it from there. Now, whilst I say that, right, if you are in the UK or you're getting up early or you're staying up in the Asian session, don't forget, if we get, where's my pen again? Oh, wrong one. If we get, say, strong GDP, strong manufacturing production numbers, right, and you get weaker CPI in the States across the board, well, sterling is going to be accelerating much quicker than the other instruments. At the same time, if these instruments, if the UK numbers are weak and then the inflation numbers are weak, you're going to get a muted move in sterling, right? So that's why, once again, I like to look at pairs that are somewhat almost neutral in this situation to get me a good trading opportunity. And if I had the choice between two instruments, I would choose Euro. The equity markets. If I came back to the currencies, I would definitely choose the Euro over the Aussie, just because of liquidity. And you know what? This thing is already churning through levels. The market has got one major level here to go. I know the Aussie does as well, but this is what everyone's looking at, Euro, right? So anyway, that's my take on it, guys. Don't forget, if we do get strong US numbers, well, you'd expect some of these instruments to move down. It's going against general momentum and the short-term trend. I hate fighting that trend, right? It just probably postpones a potential, peak of the Fed cycle. Anyway, the best trade is weak US numbers. It's got to be, right? So whilst I mention that, last but not least, just factor in the potential for the numbers to come out as expected, right? Because if they do, right, the markets, the dollar's already falling. The dollar will continue to go down, but not aggressively, right? So you've got to factor in the potential move, the numbers to come out potentially the same as the forecast, because if you don't, you get frustrated, you start getting performance anxiety, you'll be doing trades that don't make sense, and you'll be scratching your head later on, what happened? All it was is you didn't manage the overall expectations of the numbers. To me, I'm gearing up for weakness, and if we get it, I know I make money. That's it. Now, if the numbers come out strong, well, I already know beforehand that I don't make any money, so that's already covered. If the numbers come out as expected, I may have to manage some of these positions if I get into them, and that's already expected. That's already taken care of as well. So a lot of trading is about the preparation, but also mentally getting yourself in the zone to understand what's going to happen if the outcomes are certain events, certain numbers, right? So, and what that does is it alleviates the pressure on you. You can get focused and really drill into your execution to make sure you nail these opportunities, right? And as I said, look at this Euro trade, right? If this is the end of the hiking cycle, I'll tell you what, this could be the end of the Euro downtrend. We've got this trend here, and it is game time, right? Above 106.40. I wouldn't be surprised to see it above that level before the numbers. That's not going to stop me buying it, right? Because it's blue skies up here. If we get a number under 0.1, well, I'm telling you, we're going to be at 108, 108 and a half in a heartbeat. All right, guys, all the best. I wish us all luck, because this is where, you know what, a little bit of luck comes into play. And I would be very happy to see Euro shed loads high tomorrow. All right, guys, good luck. All the best. Cheerio.